What's going on, guys? So let's take a look at crude oil. Crude oil has been pulling back for the past 6 days. Now, one of the reasons why crude oil has been pulling back based on purely technicals, we came to the top of the range here. This range is going to be the linear regression channel 50. This is going to be a supply zone. If you don't have it on your charts, make sure to put it on your chart so you can kind of follow along and see where is your particular stock, index, or commodity trading in between, and where potentially is it going to find support, where potentially is it going to find a little resistance. So as crude oil has been coming down ever since we kind of top ticked it here on the 8th, we kind of had this nice rounding over top here. Easy short position here. Basically would have told yourself, hey, you know what, I'm going to short anything oil, anything energy while we're at the top of this range here. If oil does kind of break out over the 125, then definitely I'm going to have to exit that short position, and then you kind of flip the script going forward. But with that being said, quickly broke below 2 days ago on Thursday, below the 50-day moving average here. We closed below it. We tried to reclaim it on Friday. However, look at this linear regression line yet again, folks. We not only got rejected, but today confirmed the lows of Friday and Thursday, and now hit the bottom here. Now, here's why crude oil could be coming in for a little bit of a relief bounce. If we just kind of go back previously to these drops here, and let me bring out my drawing tool. If we go back previously to these two drops, this drop, and this drop, okay? So kind of take a mental snapshot of those levels here. You can see this time we came into the 50-day moving average and we bounced. This time here we came into, I believe this is the 150 or the 100 EMA, right? So the exponential moving average, we came into the 100 EMA, and we found some demand and we bounced. We came into the 100 EMA and we bounced. We came into the 100 EMA and we bounced. Where are we again? The 100 EMA, guys. So we could be looking at an uptick here on oil. Make sure you're going to want to keep that marked out on your charts, just due to the fact that each of the last 1, 2, 3 times over the past 3 months, we've been looking at a bounce. So if you're looking for a potential bounce play, then this is going to be your absolute max pain. If we do break below that, you're going to want to exit that price being 104.07. Let's just call it 104. Anything below 104 on oil, you're going to want to get out of that trade. Anything above 104, you're going to want to ride this commodity back up here. So make sure you keep an eye on it. Now, if the oil sector does decide to kind of pull in a little bit more, what we would be looking for is a daily close on a candlestick below 104. As soon as we get the close below 104, we are going to look for the next following day to confirm the new low price. Say, for example, we close here. We would be looking for the following day to take out that price action, and then we're going to target the 97.89 price level. I hope this level helps. If you guys are interested in trading commodities or futures, I would recommend to learn a strategy, join a trading group, read a ton of books, listen to a ton of YouTube videos on technical analysis. But one thing that I would recommend is trade for a prop firm. You guys can get funded, highly leveraged, US based, of course. I work with a fantastic prop firm. We're funding out people up to $150,000 worth of trading capital to trade with. Why risk your own money if you don't understand what you're doing? If you're in the learning process and you want to build a strategy and you want to build become a hard-nosed trader, then learn to trade for a prop firm. You have all the benefits without all of the risk. You put up a little cash to go through a training program, you get funded, and then you have $50, $100, or $150,000 to trade with. And if you lose, it's not essentially your money. Now, however, you have to respect some rules. You have to respect some drawdown limits. Obviously, you don't want to get kicked off of the platform, quote unquote, fired from working for the prop firm. But if you guys understand what you're doing, why trade your own capital when you're trading commodities or futures? Now, obviously, for stocks and options and stuff like that, you're going to want to use your own hard-earned cash for that. But it's something like commodities, you can trade hand in hand along with your equities, along with your options. It's a win-win situation. Again, if you guys are interested in learning how to get funded, definitely click the link down below in the description. I work with this company as well as a lot of other people in my Discord. I am funded on a $100,000 account. I got a very close trading partner in the Discord. He's funded with a $50,000 trading account. So extra side income here, guys, to to understand the process, learn what you're doing, and go ahead and start getting funded, so you guys can be able to trade and take advantage of these monster moves. I mean, this has been a monster move here to the downside on energy. If you would have been able to take part in that, you would have really reaped the rewards for that. So with that being said, I'll catch you guys on the next video. Make sure to like, comment, and subscribe if you do like this video. Also, let me know, do you guys already currently trade futures? I'm curious to know how many people out there watching the YouTube channel right now, if you guys are actually trading futures or you like to kind of track them along with whatever equities you guys are playing. I'd love to hear from you. With that being said, catch you guys all next time.